Oops, sorry about that. That was my Discord noise. Let me turn that off. What's up, boys? Mike Barildos, Zoini, thanks for the sub, Mike. Good morning, good morning. Bugatti, Crispy, UJ, welcome. Yeah, this is a RuneScape stream. You got it, youth. What's up, Nicola? Can somebody change the category to RuneScape on Twitch? Youth. The bear market has urban streaming RuneScape. It has been a long time, Xeon. Good morning. What's up, Max? The music volume is good, right? It's not too loud. That is the big question, isn't it, youth? Volume's good? Alright. Gonna have to play the song. Can we change the playlist? What do you have in mind, Max? What's up, Bad Boy? Running out of retirement saving to long Sheeb. How is Sheeb doing? Something newer? Yeah, maybe I should play something newer. It's normally 80s in here, but I'll keep that in mind. It shouldn't be too loud though, right? It should be like barely. Let me turn it down a little bit. I have a question in general. Can you briefly explain an exchange of liquidity when you get started? Exchange of liquidity? You mean like when a bunch of non-restrictive orders get triggered at the same time, like a bunch of stop losses or liquidations get triggered at the same time, and then the price doesn't move that far, indicating probably like accumulation or distribution, depending on which side. I'm not going to explain that at the beginning, but if you remind me, I can show you some examples of it. Basically, anytime you would expect a bunch of people to sell at the same time, and they do, but the price doesn't move that far relative to what it's moved in the past, it's usually an indication of some sort of like absorption or accumulation. What's up, Splack? Damon, what's up? I went to Mexico. A new trading streamer. Every time I short Bitcoin goes up. Yeah, if you want Bitcoin to go up, keep shorting it, boys. Alrighty. It's been a while. Let's go over some things most of you guys have already seen by now, but just to catch some people up to speed who haven't been watching the markets. Obviously, we had a lot of short sellers get taken out at the same spot. This is where you'd expect a lot of buying to come in. Some buying did come in. We popped the top, but it was rather insignificant relative to the previous movements in the past. So you see how much we moved in the past. And when you go for the top, you'd expect something more significant. Something like that didn't happen, obviously. And then we had sort of good fluidity here. I don't want to zoom in too much because I believe I showed it in the last stream. I'm not too sure, but good fluidity after that leads to massive dump. And once we got under this level here, which also coincides with the previous highs from 2024, so sort of the lows of 2025, matched with the highs of 2024, pretty significant level. Told you guys months ago that if we go below that, it's going to get pretty bloody. It was already bloody beforehand, but of course it definitely sped up afterwards. So now we're testing the structure of 2024. The structure was pretty solid, as most of you guys know. Everything was tested nicely, and we're sort of back there. Normally you don't want to go back there, but there's some cheeky things to look for here, like the levels that took us up to above 100K are still being held. And we saw a pretty big, I wouldn't call it engulfing, but a pretty big momentum shift so far. So now the question is, where do we go next? So there's a couple scenarios that could happen. One of the bigger scenarios would be making an insignificant lower low. So testing underneath 60K all the way down to say like 56K. If we see a regain of this low, which is about 60K afterwards, that's going to print some pretty big bullish divergence. And then we'd be targeting all these equal highs on the way down. The other scenario is catching it somewhere in this void here, which is really difficult to call exactly where that is because there hasn't been a lot of data, and there's not a lot of data we can yield to on the left. And I'll go through that a little bit on the low time frame of where that could occur. But going back to the first scenario, if this bottom does fall out again, sort of the low that we printed, and we see a significant dump, something that looks like that, then obviously we're going to have to go a lot lower and form some structure down there before we're going to get a reversal. But in the event that we do go below this low, it should cause a lot of selling, a lot of panic to continue. So if a lot of people are selling at the same time, but the price doesn't dramatically move lower, you can argue that there's some accumulation going on down there. Which again would be targeting the highs. So if we hold this prints sort of an insignificant lower low, and you can kind of double check that with the relative strength. So if we stay above about 17 on the relative strength, we'll make a new low. That would print pretty clean daily bull div. And on the way down, there's a lot of scenarios where we had equal highs. I've talked about this in the past, but more specifically, we just created some more in the last week or so. So it's no surprise that short sellers are clustered together, and there's a lot of shorting going on. This doesn't mean necessarily that we can just start pumping as a result of that, but in the event that we do, we should see some pretty big moves to take out the top side. So one of two things is going to happen if we go for the top side here. So a lot of short sellers in the same spot on Bitcoin, around 72,000. If we do pop the top, two scenarios, right? One, we make an insignificant higher high, we fail it, that means that we could go for a low lower than this. Or if we make a more significant higher high and we end up starting to hold it, then we can go a lot higher and squeeze out a lot more short sellers. So 2 things to keep in mind. We could see a bigger short squeeze, a bigger recovery rally. And I don't think that we'll never see another all-time high on Bitcoin again. But as it stands right now, I'm still pretty critical of every rally that we see on Bitcoin on the high time frame. So yeah, I mean, it's still bullish for the very long term, but on the short term and even the medium term, we have to still remain pretty stringent when it comes to these rallies that we see from Bitcoin. Although this one, probably one of the biggest engulfings we've seen so far on the bull side of the market, so it could lead to a bigger short squeeze. All right, so now calling exactly, where's the higher low going to be? So if we don't go for that scenario I was talking about earlier, where we go low and then we go for the highs, then we're looking for a higher low, and this is where it gets kind of difficult. Have to zoom in a bit. There's a couple scenarios. So looking at the structure on the left over here, when we got that big momentum shift, or at least momentarily, there's some key areas on the way down where we saw a bunch of sellers step in at the same time, and then the dump wasn't that significant that followed afterwards. So we can mark out some of these levels, and that takes us all the way up back here. And then we can use some of the more local stuff that's happened in the last 2 days, last day. So the fight that's happening right now, and we just had that retest happen right now on the 15-minute, which you can see right there. It just came in. So now we want to regain the local, and that's sort of the struggle where we saw the rejection wick in the last 15 minutes. So we want to regain this, then start to hold it, and then we can go for the next one. And the next one is going to be about right there. So this is sort of marrying that level from about a week ago to what happened yesterday in this box. So that's the road to recovery to make a higher low. We have to maintain that structure. We could test as far down as 62, but that would indicate that we're going to be consolidating in this range for a lot longer. And sometimes consolidation can be good, other times bad. But what it means is invalidations are going to start to get tighter. And the good news is I'll be able to, and probably a lot of people in the chat will be able to start to read the structure and get a good idea of what the supply and demand looks like, regardless of any big moves on the market. The bad news is that structure could break. Okay, so and having a momentum shift, you usually want to have some follow through. Without follow through, in a downtrend, it could be bad. It's probabilistically more likely to be bad, but it's not a guarantee that it will. So that's when it comes to reading the structure and trying to get an idea. So we'll see how this plays out today, but the first start is to regain around 65.7. We're at around 65.6, and then starting to build that structure today. If we do, there's a lot of local stuff that has a lot of equal highs. So here you have a bunch of short sellers in the same spot, and you sort of had that theme all the way down. You had it here too, but it was eventually taken out. So now we're sort of rebuilding that. And there's some stuff on the bearish structure I can walk you through too. But the big thing, without having to explain all that, is we need to get above this high right here. I guess I could walk you through exactly why it's that high. So if we look at where these short sellers sort of gotten tagged out, but the price didn't go a lot higher, and then we want to look at the bearish structure that followed afterwards. So the previous one was right here. We never really had a proper test of it, but it's a tight range, and if we do go for another test of it after the other structures start to break, we could just go straight through it, so it's not a big deal to look at that. And then we look at what's next. What's after that? What's after that, which we've had a pretty nice test of it so far. And then the final one, which is why this level right here at 68, 68.8 is so important, is right there. So sort of the staircase up every time we hit a ceiling. And then once we get the reversal, those ceilings will be useful to look at on the way back down. And so if we're able to start to return to any of these levels, then the bearish structure starts to show a little bit of weakness. It starts to break a bit. So obviously the first step was what I said earlier. We need to start building a bullish structure down here, which is recovering these lows, which is being fought for pretty much right now. So something like this, and then holding this and starting to build the staircase back up, and then going through all these short sellers at the same time should be enough to start to crack the structure. Even if we see a dump here, it's not a big deal because now we're starting to challenge the bearish structure. But that's sort of what we need to see. Again, the first steps are going to be building sort of the bottom, and then once the bottom is built, if it is built, then we can go to challenge the other side. If it's not built, we're going to still remain in free fall here, and the S&P is not having that great of a day, neither is the NASDAQ. So it's going to be a little bit harder for Bitcoin to start building some structure here. If the S&P starts to turn around a bit and we start to see it recover, it's going to be a lot easier for Bitcoin to build these structures and eventually go and challenge the top side. But if this all breaks down and falls out and you still want to look for the higher low, fortunately the next one is pretty deep. It's around 62.35, so right here. So if this all breaks down, we could see a bleed all the way down to here. But we'll see if that happens, because the S&P, a lot of the market open and what followed after that, a lot of that selling has already come in. It doesn't mean that more can't come in, but as you know, the S&P usually doesn't crash. Sometimes it does, but it's pretty rare. And so if it doesn't, then we should start to see that recovery begin, and it's in a good spot for where Bitcoin's at in particular. So I'll come back to Bitcoin here in a second. Let's look at some legacy stuff. I'll leave Bitcoin up on the left. Let me just mark out where we need to hold on the higher time frame before I do that. So we want that, and we want to gain above that. Okay. So you can see the struggle that's sort of happening right now, and you can even mark out these local areas too. These ones aren't as important because they're kind of new, but I'll leave it up there. All right, let's I'll come back to Bitcoin here in a second, but let's look at legacy, because of course the S&P, this is the 1 minute of the stock market. You can see how similar they are. If this is dumping, it's really hard to get a rally going on Bitcoin because of the way non-discretionary market making is going to position itself, sort of retreating on the bid side of the market a lot quicker if legacy is going down. So the VIX has popped up a good amount. The structure on the S&P is pretty neutral right now, as you can see. We did take out liquidity on lows. We haven't really taken out on the highs, but it's pretty neutral. And usually if it's neutral, that means that it's going to go up. But the VIX is popping, as you can see. Whoops. But nothing too significant so far. We should start to see a little bit of... it's hard to call resistance, but we should see the VIX start to trail down soon, if not by tomorrow. So we might have to wait till tomorrow before a recovery rally. If the VIX doesn't recover by tomorrow, which means going down, then we could definitely be in for a bigger storm. But typically the S&P does rebound. Again, every once in a while it will correct and quote-unquote crash, but it's hard to assume that it's going to do that all the time because it very rarely happens. So if that's the case, then the volatility index should start to either slow down today or tomorrow, or later in today, and then we should be able to see a Bitcoin recovery, at least of some sort. I'm not saying it's going to go Bitcoin's going to moon or anything, but you could start to squeeze out some more short sellers. And as we're talking, Bitcoin's still struggling here. It looks like the S&P is still on the way down. So if we do hit the free fall, then it's all the way down at 62. Forgot to show you guys the order book too on Bitcoin. The bids are pretty thick, but liquidity is thick on both sides of the market for Bitcoin. There's a small iceberg here, but there's not too much. There's a ton of icebergs on the way down. I'm sure a lot of you guys saw that, but even though there's icebergs, it doesn't mean that there can't be a lot of sellers that come in at the same time. Alright, let's look at gold. So people are wondering where the precious metals markets are going to go. This is a lot of volatility that came in on gold and silver, more specifically silver, but still pretty massive on gold as well. So I wouldn't be surprised if we see consolidation finally start to come into the gold market for an extended period of time. Either that or a dump. If we do see a pump, it's going to be fucking massive, because when you see this kind of huge volatility strike the market, this is where a lot of hedging is going to take place. So people obviously very bullish on gold. This is where you could start to see some people start to take shorts to cover risk, or just taking naked shorts in the retail world. If that's the case, then and we get a pump afterwards, it'd be pretty fucking massive. But it's hard to assume that's going to happen after this volatility comes in. It doesn't matter what market you're looking at. Anytime you're on like this long rally that we've had and a huge wave of volatility comes in, it usually scares a lot of market participants, and it might not be realized immediately in terms of what the true supply and demand is, because you're still going to have people that are coming in late to the rally who maybe don't look at charts, but just have just heard that gold's going up a lot and it's at a discount right now or whatever. You're still going to have that demand coming in. But in terms of like the bigger players, this is where we could start to see a small shift of supply and demand. So I'm still bullish on gold, but at this point, the risk is getting relatively high after the volatility come in. I'm sure there's a lot of other people who see it that way. And silver is the more pretty aggressive dump that came in, as most of you guys saw. Silver also had a more aggressive rally though too, right? And so the higher something goes in a quick period of time, you could easily run the risk of it going down pretty quickly as well. Silver's in a pretty interesting level. You pretty much want to hold from this low here at 71.3, and you can marry the local with that. So, So from 71.3 to 73.4 on silver. You hold this, and you can resume at least trying to get a new high higher than this high and build a bigger consolidation. But if this fails, then I guess you have the Hail Mary double bottom that could happen, but you guys know I don't like that. And then, so the big area in terms of where I think structure and fluidity looks good on gold, silver would be 71.3 to 73.5. Down here, you could see a rally. We've seen plenty of these sort of equal lows transpire across all the markets, not just Bitcoin, but it's been a pretty common theme for the last couple years. I still don't like them that much, and the reason why is you're going to have all the retail market participants with the same invalidations, right? So you already have people who are willing to sell if we go underneath this low because it's support, and you do it again, you're going to have new people that are entering positions in this leg here that are going to want to sell the same spot, all retail, sort of seeing the same area that they want to capitulate at. Could lead to something quite bloody on silver. So you really do want to hold 71.3 to 73.5 to have the potential of either consolidation or getting a new high, or new all-time high. If not, then it could get quite bloody. The dollar. Structure started to break a bit on the dollar. Now it's still trying to fight for a bottom. There's not much I can report on the dollar. I still think that we're close to the relative bottom, but of course I was wrong about this low here. I did mention the last stream that structure started to break on the dollar here, and also here, but I don't have a strong bias on it. I would still argue that we bottomed on the dollar, but I'm sure a lot of people in the chat disagree with me. That's just how I see it right now. Oil, still following the plan. It's the only thing you could do on oil was to long it. It wasn't necessarily a good long, but I'm sure some people in the chat did it. I'm still waiting for a bit higher before looking to short it, but yeah, still the only plays on oil is to long it at this point. You don't really want to chase this, rather have it come back down and hold structure around 61 a barrel, but been kind of hands off on oil ever since that short play I talked about last year on it. And then looking for another short opportunity depending on what kind of structure starts to build again. The 10-year was spooking me here on the bond. So the 10-year finally following a more safe route. This spot here was really spooky, but the fact that we've started going below it is a good sign. I was a little bit afraid that confidence in the American bond market was getting crushed, but it doesn't look like that's the case, at least from the yields, and then obviously the supply and demand of the prices of bonds interacting with the yield. So that looks good. Rates obviously are pretty much assumed to be continue to go lower, should drag the yield lower. So it's no surprise there, right? I think most people are predicting, at least in 2026, we're going to see more rate cuts, and I would not argue with that. Tesla followed the plan quite nicely so far. We're getting a retest on it. It's a bit deep of a dive on Tesla. I would have liked it a little bit higher, just because you start having all the options traders in the same spot for invalidations. But as long as you can maintain above 410 on Tesla, you should be able to send it. But before you send it, you could run into turbulence around 475. So like right here is where you'd see the inverse of the same thing. But the fluidity on the bull side of the market for Tesla is not that good. It did hold, but the fluidity wasn't good. So meaning the bulls technically won the battle, but not decisively, which could be a little bit spooky. I'm not going to go through all of the Mag 7. They're kind of getting beaten up today pretty bad, besides Google. As a result, the Nasdaq's down. And then you have a good sign, though, for the health of the stock market is you actually still have market companies outside of the Mag 7 are not doing as poorly as the Mag 7. You actually have a couple doing green, like you have Walmart, McDonald's, which people say are like recession-proof stocks, but I don't believe in that. You also have CVS and PG doing well. So that just shows that, yeah, it's a down period, but if it was truly bad, then you'd have the entire market just getting beaten up. But right now it looks like it's mostly technology, and then more specifically the Mag 7. Okay. Let me see. Is that pretty much an update on Legacy? Did I miss anything here? But I mean, MicroStrategy is getting beaten up. That's because Bitcoin's getting beaten up too, right? All right, let's look at Ethereum. So Ethereum's a tricky one, boys. This one's getting beaten up pretty badly. We had a couple retests where previous structure held. Now the question is, is that good or is that bad? So usually it's bad. Structure started to show cracks multiple times now. And even the retest here is really bad. So now you have equal lows and you have a retest of the previous structure that's bad, but doesn't mean that it's guaranteed to dump. It just, from a technical perspective, it looks pretty bad. I think it could still recover. I don't think Ethereum's done for. It certainly could still recover, but I need to be convinced of it. And the way I get convinced of that is to start building local structure that's stronger. So right now there's not too much data that's been printed since we hit that low down here at around 1750. The structure that followed so far was just like insignificant higher highs, which led to taking out all the lows. That's pretty standard issue. So Ethereum is kind of in the spot where it needs Bitcoin to help it out, and then Bitcoin's kind of in a spot where it needs the stock market to help it out. So obviously you never really want to be in that position to need another market to sort of lift your market up. But that's usually how it goes. Yielding to the bigger market caps, sometimes not the case. Sometimes in a bull frenzy it won't be the case, but yeah, I mean, it doesn't look great from a high time frame structure, but it doesn't mean it can't improve. I would just need to see certain things transpire. If it does get bloodier though, Ethereum could go deep sea diving. Not that it hasn't already, but when I zoom out and show you the sort of the bigger chart on Ethereum, it definitely still has some room to go down in the event that we see the structure play out. So we've got equal lows there. Just not much structure here that hasn't already been done. So Ethereum's kind of at a fight right now. It needs to start rebuilding structure soon, or we could go underneath 877. So pretty much go under 900 if we don't start to see that recovery take place soon. The only thing that would change that is if Bitcoin has a huge short squeeze that comes in. That would be able to start to shift the structure without having to build much. But if Bitcoin goes sideways, then we're going to need to see Ethereum start to build good structure. And so I guess what that would look like is, obviously you don't want to get too close to the previous low, and if you do, then you want to make an insignificant lower low. So where we're at right now is fine. If we see something like this, that starts to get spooky. If we do get down here, you just want to go through it and make an insignificant lower low and flush out all the long leverage. So all the sort of the leverage longs that have hopped in since that big rally. But of course, if you do go below this low, you run the risk of something like this happening, because a lot of people should be selling at the same time. However, if a lot of people are selling at the same time, but this doom arrow doesn't happen, instead we see a reversal to regain that low, then that's indicative of accumulation. That's a good sign. It means that we can go for the highs, similar to Bitcoin. But this equal low stuff, the reason why it's not good, and it's the same thing I showed on the other charts, the equal low stuff is not good because you know, you've already got people that are looking at this low down here and saying, okay, this is the support. If it goes under it, then I'm going to sell because I think it's going to go a lot lower. And so if you find like a bounce here or something, then you're going to have all these people thinking the same thing that these people thought, and you're going to have all those equal lows setting up shop in the same spot, and it could be quite bad. So best scenario is either we hold it now, or we go and make a new insignificant lower low. Those are the two best scenarios to start to rebuild structure. But yeah, I mean, it's no surprise. I mean, the structure on the high time frame doesn't look good. Like, if I'm being completely objective, and I do want Ethereum to do well, but you know, that structure going up, we needed to hold this. This was the next one. It was a battle for it, right? Bitcoin dumped and Ethereum felt the sting. I mean, Ethereum was poised to actually do really well. With the local structure having equal highs, it was poised to at least, you know, pop the top, but Bitcoin dumping is going to drag Ethereum down as well. Ethereum on its own, the chart looked good, but they're still very, very correlated. If Bitcoin dumps 3, 4, 5%, it doesn't matter what the Ethereum chart looks like, it's going to dump too. So, and then after we saw that huge dump come in, then we look at the next spot of structure, and you sort of got this. This is really what you don't want to see. Not holding it and then the retest of it. That's bad. Again, it doesn't mean that it's over. The other scenario here is you have another retest of this, which is not great, but it's not the end of the world. I've seen plenty of times where it actually holds the higher time frame retest and does rather well. So I'm kind of indifferent. Most of the time you don't want to retest the structure, but I have seen it play out really nicely before. And so first step is to see, do we get some sort of higher low that isn't close to the previous low? We don't want to get anywhere close to this. Remember, it's all relative, so what is close? I mean, close would be like knocking on the door of it. Where we're at right now is fine. So if we see recovery here, that's fine. Or if we see the bottom fall out, a huge sell-off transpire, but price doesn't follow the huge sell-off, doesn't do this, then that would also be a path to recovery. So this would be a path to recovery, this would be a path to recovery, this would likely lead to something like that. And then we'll have to see if we do get a rally going. The question is, what happens at the highs, right? So although we had some insignificant higher highs coming in, we also saw some equal highs too. So we had a bunch of short sellers in the same spot. So if we do go for the highs and things start to turn around for Ethereum, then we want to see what happens up here. If we see that, then we're likely going to dump a lot. Probabilistically underneath 1750, but maybe a lot more. So if we are to go for it above 21.5, then we want to see something significant, and we want to see it start to hold and consolidate. That could start to turn the trend around and get the ball to the other side of the field. So we either want to see a hold here, which leads to this, or a hold here, which leads to this. But if either one of these hold and it leads to this, it could get really bad. Because all this here, which is just the squeezing of short liquidity, all it's showing you is, you know, you have a lot of short sellers here. And the reason why you have a lot of short sellers there is because if they shorted Ethereum you know, here or here, a lot of them have been invalidated, but if they shorted it here, here, or here, they likely have the same invalidations. So a lot of short sellers getting invalidated at the same time is going to prop up the spot market because of the relationship between arbitrage market making of the spot market and the derivative market. And then if it's temporary, that just shows that the move that we would get like is almost artificial, that was caused by leverage, not actually caused by supply and demand. So that would show an imbalance of supply and demand. Basically, everybody who's shorting at the same time closes their shorts on the derivative market, which is not the spot market, does not affect supply and demand, which causes the price to go up because when a short closes, it operates as a market buy. So a bunch of shorts closing, a bunch of buying happening on the derivative market. Is going to prop up the spot market as well temporarily because, again, the relationship between arbitrage market making, which means that in simple terms, there's the spot market, which you have buyers and sellers of actual Ethereum or actual Bitcoin. And then you have the derivative market, which is speculating on where the spot market's going to go. If you were to long something or short something in crypto on perpetual contracts, it's not going to affect the supply and demand of the spot market. So what you can do is you can look at, let me show it to you. You can look at the relationship between, so on the right you have the spot market, on the left you have the leverage market, right? Now these spreads are pretty tight on Ethereum. They're a bit looser on Bitcoin, but right now on the spot market, Ethereum's trading for 1911. On the derivative market, Ethereum's trading for 1910. So you could long on the derivative market, and you could sell Ethereum on the spot market and capture the difference between the two. And so we see a lot of market making, sort of arbitraging the difference between those two prices, right? So they're buying or they're longing Ethereum, and they're selling Ethereum to capture that spread. And then as a result of that, if a lot of shorts get squeezed here on the leverage market, it'll temporarily prop up the price, and that'll prop up the spot price as they try and capture that spread. If the move after shorts get squeezed doesn't get backed by actual buyers on the spot market, then that's when you'll have like a temporary imbalance of supply and demand, because the only reason the spot market went up was because it was capturing the difference or the spread of the perpetual markets. So a lot of people speculating that Ethereum's going to go down end up buying back their speculative instrument, but not actual Ethereum. And so when they all buy back the speculative instrument, not actual Ethereum, it will raise this instrument up, which will temporarily raise the spot instrument up as well, as arbitrage market making tries to capture that spread. And as a result, because the spot market only went up because of the market making and not because of the actual demand, that's where we could see a reversal. And usually those reversals are pretty big and have a lot of momentum shift and a lot of emotion. And so that's where you could see something like this. And so not only does this show you that sort of imbalance of supply and demand occurred, but it also shows you the in this range that we've been building from the highs to the lows for the last week, there's more supply than demand. Otherwise, we would be able to hold something like this. So there's plenty of examples of this happening. In fact, it's kind of an important thing to look at, because on Bitcoin, there's been plenty of examples of this happening before the dump started to occur. So like this, for instance, on Bitcoin, you had all these equal highs, right? So you knew where the short sellers were. Why? Because let's say they shorted Bitcoin here and they shorted Bitcoin here. Well, by the time this move happened back to the highs, everybody who shorted Bitcoin here has been invalidated, because there's another set of equal highs, but they've been invalidated off this move. However, the people here never got invalidated, so their invalidations are resting above it, right? So these lines I'm drawing is just showing you a bunch of different invalidations. And then you have people shorting it here because it just dumped again. It made equal highs, or whatever retail mindset is. And so you've got a bunch of new invalidations. Okay, so you take out all those invalidations at the same time, a bunch of shorts get squeezed, the spot market follows that move because of the arbitrage market making, because they're trying to capture the spread. And because there wasn't enough real demand on the spot market, rather, it was caused by the leveraged market, then we see something like that happen. And when that happens, it means that we're likely going to go for the lows. It's a shift in momentum. It's basically showing the market, because when we're right here, and this is where we are on Ethereum too, by the way, you have highs and you have lows, right? You have highs and you have lows. You don't really know what the supply and demand is unless you're really good. Like it's most people, it's hard for them to see the structure and stuff. But a clear indication of supply and demand is if you break out of a range and then you fail it. The same thing could be said to the other side of the market too. I mean, if you were to break out and take all the longs and then reverse it, there wasn't enough supply to match the demand there. But in this case, there wasn't enough demand to match the supply, and that's where you get sort of that imbalance. Basically, a huge red flag that everybody can see. Yes, it made a higher high, but how significant was that higher high relative to the previous highs and lows of the past? And so this happens fairly often on the way down on Bitcoin. There are other examples of this, right? This is in retrospect now, but it's sort of the type of stuff I look for structure. More obvious stuff that's easier to see is this. So you have like same scenario, equal highs, take it out, fail it, and then dump. So speaking about Bitcoin now, if we do find some sort of higher low here at some point, which we're kind of in a big battle for that to happen, and then let's say price comes back up and starts to reject off these equal highs again, well, now you know what to look for, right? You do want to maintain making higher lows, and then if you were to go for it and you see that, that's usually means that we're going to go for the low that created it. But if you see this, then we can go up another leg, because it shows that not only did shorts get squeezed here, but there was enough demand of people actually buying Bitcoin to push the price higher, instead of just the price going higher because people who are betting against Bitcoin lost their positions. Coinbase down, people can't trade or anything apparently. I need to check. My Coinbase ticker is showing that the markets are still moving over there. Maybe it's like region based or something. Seen exchanges like Bybit offer sketchy APRs on USDC like 20%. Are they desperate for money? I don't really like seeing 20% yields. That's kind of unrealistic. Even the thing that Saylor's doing, I think he's offering like 11 or 12% yields. That's usually a red flag. But I haven't looked very far into how he's getting that yield. Usually those kind of instruments will go down in price, but you'll still get the yield until you get maybe a big reversal of some sort. But that could take a while. Yeah, anything above the 10-year in terms of like the yield for the 10 year is 4.1%, right? Anything above that you need to look really deep into it and figure out, okay, how the fuck are they outpacing the bonds? Sometimes it can happen, like with dividends and whatnot, but usually, like I said, the underlying asset decreases in your principal decreases in value while you're earning that yield. Not so much on the bond market, but much more often in the private sector, like junk bonds or corporate bonds, or even getting yield from, like you said, USDC. A sweet spot right now, I think, is like 4%, maybe 5% on a passive yield. 5% may be a little bit more aggressive, but you can bump it up all the way to 8% and still be pretty safe. It's when you get to like the double-digit yield, when the 10 years at 4.1%, it starts to get a little bit suspicious, and you really should look into how they're doing that. But yeah, I don't like the thing that Saylor's doing with the yield. I don't think he needs to do that. I think it's a little bit greedy. Because I've seen those scenarios happen in the past. It doesn't end good a lot of the time. You can check out XRP. Oh yeah, let me look at some of these other coins. So ETH, Bitcoin. Let me put Bitcoin back on the 1 minute. Okay, there we go. ETH, Bitcoin structure starting to crack a bit here, boys. Just same thing with ETH on the dollar. So structure starting to crack. It needs a Bitcoin short squeeze to start to rebuild it. This is really unfortunate. because, you know, ETH Bitcoin looks so good. And I think it can rebuild. It's got a lot of breathing room here to rebuild. I've seen structure like this crack with the relative volatility, and it's actually rebuilt before. But as it stands right now, ETH Bitcoin structure is starting to crack. But it's one of those charts where I have seen it happen in the past where it ends up rebuilding. It's not, the probabilities aren't heavily against Ethereum, against Bitcoin here. So from a price action and structure perspective, yes, there are some red flags, but I could still see it be rebuilt. More so than other things that we looked at in the past where I say, okay, structure's damaged, maybe it can rebuild. This is like, okay, it can actually fucking rebuild. Like, there's a good chance, you know. Solana, though, I mean, I told you guys about Solana, man. If it doesn't hold this, it's free fall time. Alt's not really having crazy breakdown. Yeah, that's a good point. And this is a theme that we've been seeing the past, I don't know, I want to say half a year almost, 6-7 months. The major alts like Ethereum and Solana have been trending with Bitcoin quite closely, right? But some of the, you know, smaller market caps, maybe outside of the top 10, have been faring the storm quite well, which is unusual. And that we've seen that theme happen, but it's picking up. I don't want to comment on what it's going to lead to just yet, but it still is an interesting data point that's been occurring for a while now. Where these smaller altcoins, they've just gotten beaten up so badly that maybe there is a road to recovery on some of them. Obviously, some of them are going to be donezo, but you just have to take it on case-by-case basis, look at the volume analytics and whatnot. Anyways, with Solana, yeah, man, the structure is pretty fucked. You're sort of in free fall right now. So Solana is heavily reliant on Bitcoin. Ethereum, pretty reliant on Bitcoin. You know, needs a little bit of help, but Solana certainly needs help from Bitcoin here. The reason why I say that is because we spent this huge time consolidating for the last, you know, pretty much 2 years. And before we consolidated for 2 years, we went straight up. So we had this huge range of consolidation after going straight up. Now we've fallen out of that consolidation range. So we created a void on the way up, consolidated, and now we're re-entering that void. And when you re-enter the void, you sort of need a Hail Mary. You need in this case, you would need Bitcoin to sort of save the day on Solana. But it's going to be really hard to do it. Because what is the rationale for people to step in and buy right here? Maybe something like this, but we're already below it, and anything below that was just straight up. So like, what is the rationale for people to start bidding that market? The saving grace, which I've seen happen, is exuberance from bears. Shorting every small rally could lead to, especially with ratcheting stop losses and trailing stop losses, could lead to a cluster of invalidations of short sellers. And then when those short sellers all get tagged out at the same time again, you're going to have that small rally. And what you would need is confidence and just brave market participants to chase that rally. Enough so that you could start to build consolidation. So so you're going down, right? And you have people shorting it here, you have people shorting it here, you probably have a bunch of people shorting it right here too. These guys from up here maybe have moved their stop losses to down here, and these guys from up here have maybe moved their stop losses to here, and you already have all these guys with the stop losses in the same spot, so you start to cluster all these short seller invalidations in the same spot, and then you can pop it. Now, popping it, you run the risk, again, of an imbalance of supply and demand, which could lead to something detrimental. But in the event that you have a bunch of brave market participants start to step in and chase the rally back up, you could lead to consolidation up here, which could lead to a recovery. But you need you need two things to happen, right? You need all the short sellers to start to cluster together, which can happen after extended periods of consolidation. That's step one. And step two is you need people to bid that rally on the spot market. It's the same boat that Bitcoin and Ethereum are in, except this one is a bit different because you're in the void. which is you're less likely to get people to step in and bid the market when you're in the void. It can happen, but I can't say it will happen until I start to see that. And then if I start to see that, then I can change my opinion, and we should have a lot more upside after that, right? I don't need to catch the absolute bottom. I can catch a higher low and perfectly content with that because I don't know where the bottom is right now on Solana. Honestly, the bottom on Solana is almost completely in Bitcoin's hands. So, in terms of like the local structure going on with Solana, yeah, man, it's just in Bitcoin's hands. I mean, this is nice. We're starting to form a rally a little bit here because it's the starting to build a little bit of structure. You do want to hold that, and then you can go for the next one, which is right here at 81. So you need to see something like this: recover the local low while holding good fluidity on the high time frame, and then you need to get through here, which is going to be hard because this is where you have previous short sellers get squeezed. You saw an imbalance supply and demand. So if you can get above that, then you retest this, and then you can build structure to take on the top side structure, which is kind of hard to see, but it's like that. So you crack bear structure here, hold bull structure, and then go for all the equal highs, pop the top, and then hold the top. If you don't hold the top, then all this structure down here gets challenged again, and you could go lower than that. So first step, hold fluidity, which it's doing right now. Bitcoin's also pumping while it's doing it right now. And then crack bear structure, retest the bull structure, go for the top, and then see what happens after. But this is the ultimate. If you are really bullish and you think this recovery is going to happen, you have to pay attention here, because this is where we see if there's an imbalance of supply and demand. Dogecoin, most of the alts are similar. Solana's kind of in a worse spot than a lot of them. Doge actually looks a little bit better, but it's pretty much created the equal lows. It's the equal lows, as you guys know, are not good, but it's still going to be in the ball is still going to be in Bitcoin's court as of right now. Yeah, I mean, I haven't looked at the Doge chart in a while, so I'm looking at it for the first time in a while with you right now, so just give me a second. Yeah. Not that great right now, unfortunately. It's done a little bit better than Bitcoin, but a bunch of people leave when I start talking about the altcoins. Alright, XRP. Pretty surprising that it's held the void. So similar scenario of Solana where you have that huge upward move, long extended period of consolidation, and you start to enter the void again. But this is a nice little bounce so far. Now you need to hold approximately 1.25, 1.26 on XRP, and then you can start to build good structure. I've seen XRP hold this fluidity so many times. XRP, if you are a swing trader and you like to be patient, wait for passive entries, XRP is a great thing to trade because it takes a while before you get an opportunity, but usually the probability of that opportunity is rather high. So the downside, of course, is you're not going to have a trade every single day on XRP, but when a trade does present itself and the conditions are good, then it's usually the probability of that trade working out is usually pretty high. Miastad redeemed a sub. Can you say something in the chat so I can gift it to you? Litecoin cleared all the lows out. Still trying to fight for it. As it stands though right now, guys, I can go through these alts. The big takeaway for a lot of these alts, including Litecoin and XRP and Dogecoin, pretty much the last three we looked at, and a lot of others, they're not doing as bad. I mean, look at the last 2-3 years of crypto, right? Bitcoin is down 2.2% right now. If you took last year, for example, and Bitcoin was down 2.2%, Litecoin would be down 5 to 10%. Same thing with XRP, same thing with Doge. They'd be down major right now. So it is interesting that we're not seeing that same thing happen again. Again, it doesn't mean that the bottom's in, right? You still need Bitcoin to do well. I mean, if Bitcoin dumps 5-10%, these alts are going to come down regardless. But it does show that there is more resilience, and like I think Power said in the chat, there's less leverage in the altcoins, obviously. Ever since what happened on October 10th, there's been way less leverage in the altcoins. It doesn't mean that there still isn't some, but it's way less, and so the resiliency is going up. The bottom could be close, or if Bitcoin continues to free fall, then maybe not, but we'll just see how that plays out. Let's see, we've got a little bit of a rally going here. Yeah, liquidity is so deep, guys. There's still a pretty big arbitrage opportunity between Coinbase and Tether, Bitcoin against Tether and Bitcoin against USD on Coinbase, but the gap is starting to close a bit. The spread was a lot bigger these past couple of weeks, but the gap is starting to close, which is a good sign. All right, let me remark out these levels on Bitcoin here so we can see what's happening on the higher time frame. Okay, so that, and then this. Yep, that looks good. Do we care about the futures gap? I mean, the gap thing is kind of a... There's a lot of people who swear by it. I'm not saying it's bad, I just don't really factor it in that much. Like, I'll look at it, and if it lines up with everything else I'm looking at, then I'll support the idea, but I'm not placing a bid right where the gap is, or looking to long when the gap gets filled. It is pretty crazy how often the gap does get filled, though. I'll give you guys that for the people who do trade gaps in the chat. The S&P looks like it's recovering a bit, which is going to help Bitcoin out a lot. Yeah. And there's so many people who say like S&P and or the stock market and Bitcoin aren't correlated, but even when you look at the 1 minute chart, I mean, on the left is Bitcoin, on the right is the stock market. They're pretty fucking correlated, man. Be gentle with gaps. No, that's what I'm saying. Like, some people swear by it, and I've seen them get filled all the time. I'm not going to place a bid at the gap. Basically, I'm saying like I'm not going to open a trade because we had a gap or something like that. And honestly, you're going to have gaps pretty often when you have a 24/7 market interacting with a not 24/7 market. The S&P usually gaps on open. Sometimes it does, sometimes it doesn't, but that's when you'll see gaps on the S&P. But the reason why, like, so what they're talking about, let me open the chart. So the CME futures, you're going to have gaps, right? The reason why these aren't as good to trade is because of gap risk. If you have invalidations, particularly if you're like swing trading or scalping or doing something on a lower time frame, you don't know if your stop loss is going to be triggered at the price that you want it to be triggered at. I'm not even talking about slippage. I'm just saying, like, you know, say you had your stop loss like at this low. Fucking magnet tool. There we go. If you had your stop loss at this low, then you're not going to get filled until the open down here. And the issue with that is it's hard to define your risk. You know, slippage can make it hard to define your risk, but there's ways that you can look at like average book depth and look at the order book and whatnot. But with this, I mean, you're gonna incur a bigger loss if you do lose than if you were trading on something that doesn't have those kind of gaps. And this is applicable to pretty much any common stock as well, not just the CME futures for Bitcoin, but you can find gaps in almost any common stock. The ones with a bigger options market, like Tesla, are going to happen less often. But I mean, you know, any common stock will have gaps because it opens and closes. Bitcoin, you're never going to really have gaps. I mean, what a gap looks like on Bitcoin is just like a huge slide on the candle, which you can incur slippage, but you know, it's not the same thing. The IBIT gap. Which one's interesting here? Oh. Yeah, all the Bitcoin treasury companies are getting slammed. It's a nice volume spike on it. Yeah, man. These charts look so similar to Bitcoin. I mean, this looks so identical to the Bitcoin chart. But the big thing is, like, as an easy hedge, what could you do? And what a lot of people have done, I believe I've spoken of this in the past, but if you wanted to hedge your Bitcoin holdings, there's a couple ways you could do it. But one of the popular ways amongst institutions is to, you know, buy Bitcoin and then short the treasuries or the trusts or whatever. Like the play has just been buy Bitcoin, short MicroStrategy. Now, the good news about that is, and this is the same thing I was talking about in Solana, if you get enough short sellers and enough exuberance from bears that are all shorting at the same spot, and they start to cluster them together, and you actually saw this on GameStop, right? Then you could pop it. So, and that would, if it's a big enough pop and it's held to some reasonable degree, that would indicate a lot of market participants who are scared. That would actually have them, it would restore a lot of confidence, right? Like with GameStop, and this, I think this is one of the biggest mistakes by institutions and hedge funds and stuff, is they get really confident in their methodology and the fundamentals, to the point where, you know, like if they do have invalidations, they're really wide, or sometimes they don't have, and they'll do it discretionary based. But like you have GameStop just drifting low, right? And of course it's drifting low. It's a retail, it's a brick and mortar video game distributor. So I mean, of course it's not going to do well because everything's going online with video games. But with everybody just shorting every rally, you have all of these invalidations starting to cluster in the same spot, and all you need to do is throw a spark on a haystack, and it ignites. The fact that GameStop is still consolidating here is really fucking impressive. So like this kind of stuff is how you can turn the ball around to the other side of the field, because you have consolidation happening, right? I'm not saying go buy GameStop. I still think it's too risky to do it, but that's the kind of stuff where you could see these big reversals, is when everybody's shorting it. If you heard me at the start of the stream, I was like, if you want to help Bitcoin out, open a short. It's a good way to help Bitcoin pump. What's up, Mooncatcher? God, the Reddit guys do not quit when it comes to GameStop though, huh? It's fucking wild. I mean, it's great volume on the pump. Save Biddy. Oh, Magic, you've turned bullish, huh? You flip bullish. So yeah, like if you look at like a Bitcoin chart, or more specifically the Sailors chart, you're gonna have a lot of people that are gonna dogpile and shorting. And let me show you some examples of this. So let's look at the last year of the derivative markets. So what you're looking at here is this green mountain on the right shows you how much cumulative short liquidation leverage, basically where the short sellers lose their positions. So they're borrowing, quote unquote, borrowing money to bet against Bitcoin. And if the price moves too much against them, meaning the price goes up, then they'll be forced to close their position, regardless if they want to or not. Of course, they can add margin, but in the world of, you know, crypto degeneracy, particularly with leverage, people just don't add margin, or they go full port short, full port long. And this is why the markets are actually rather predictable in crypto. But as you can see, there's like no red mountain here in the last year. Pretty much all longs from the last year, 365 days, have been completely wiped out. And shorts continue to dogpile on. So if you take the big three exchanges right now, you're looking at, if we get the price back to 104K, you're looking at about 25 billion worth of liquidations. And these are not going to fire off as liquidations. I've said this in the past. Usually short sellers are a bit more sophisticated than longs. So people that like to long will usually just use liquidation as their stop loss, whereas people who short a little bit more sophisticated will use stop losses to avoid the spread and to manage slippage. But yeah, I mean, at least we know that 25 billion worth of buys in the derivative market will come through on Bitcoin if 104K gets taken. And it's likely going to be a lot more than that, because as Bitcoin spikes up, people will look to add on to shorts or open new shorts. It'll likely be way more than that, but that's just an example of, and I can show it to you another way. There's the Model 3 heat map. To turn up the, there we go. So you saw, let me zoom this out a bit so you can see it. So these bright yellow lights here showed all the long leverage. So where people that borrowed money to long Bitcoin on leverage, this is where they were getting invalidated. And you can see there's not really much left. I mean, there's some that's forming down here, but most of it's starting to form, most of it's starting to form on the top side, right? And we'll continue to see that happen because I think sentiment is starting to shift. I think, people are expecting lower on Bitcoin, at least a lot of them. And we can see that from a variety of ways, but sort of the sentiment is you still have these people who are on last stand mode, who still are trying to long Bitcoin. It's always going to happen regardless of the price of Bitcoin, but you're finally getting a lot more people who are going to short it too. Now it's time for the pain and bear. 104K in a couple years. You think we're going to 9K? I don't think Bitcoin's going to 9K. Like I said, if you're worried about your holdings in Bitcoin or Ethereum, whatever, they'll eventually get another all-time high. They're not dead. Just the big question is, how long will that take? Particularly when you see things like precious metals, right? Gold and silver just going on huge rallies. But how big are those rallies? Because the candlestick chart makes it look really big. Yeah, let's take gold, for instance. It's a pretty massive rally when you just look at the chart like this, right? But let's take from 2020. So in 6 years, and I'll be fair, I'll take it from the midpoint. In 6 years, gold's gone up 166%. That's nothing in crypto. Now, the crypto charts are a lot more messy, and there's a lot of ups and downs. It's not just a straight shot up, but if you hold crypto for 6 years, you're likely going to get a better return than 166%. And we can cherry pick, where you want to draw that 6-year origin from. But the point being is that, yeah, I mean, things rally like crazy while Bitcoin's not going so well. But that's sort of the price you pay when there's huge pumps. When there's huge pumps, you're going to have a lot of bleeding that follows. And then the cycle repeats, and you're going to have a huge pump again, and then a lot of bleeding that follows. But I think people just, when their crypto holdings aren't doing good, and of course, no crypto holdings are really doing good unless you've hedged it and you have short sales open, you're going to be really tempted to shop around and see, what's doing well. Precious metals obviously did really fucking good. Institutions in Bitcoin, it's going to lead to consolidation for years. Maybe. Why do you say that, though? Ethereum is the one exception where it's been pretty much, it's been 5 years of consolidation on Ethereum. But if you go to 2020, obviously, it's up 1,000 something %, 1200%. Even after all that dumping, it's still up 1200% in the last 6 years. But if you pump that much, you're gonna have, you know, nothing goes up forever except for the dollar against the lira. The thing that goes up forever is this chart. And it's not going up, it's just the Turkish lira is going down. This short's crazy, right? But this isn't, you're not actually gaining, you know, value here in dollars. It looks like it, but it's not. Unless you leveraged it, right? I believe it would be similar to metals when ETFs were added. Maybe. You could be right about that. I don't know. I think that the difference is Bitcoin's market cap relative to metals is still pretty small. It's like a tenth of it, right? Less than a tenth of the market cap. I think you're just gonna have, with the ETFs, you're gonna have a lot more people who are gonna be hedging. You know, the old days of Bitcoin was just buy and hold, right? It's still the same way, buy and hold, but now there's hedging. Which I've been saying for the past couple of years on Bitcoin. You know, it's smart to hedge. Love to be wrong. Yeah, I mean, I don't think your assumption is wrong. It could be the case, but I don't know yet. Historically with Bitcoin, though, it's... Okay, so let's entertain the idea, right? The ETFs have... what? The ETFs have about 1 million Bitcoin, right? Have about 5% of the supply. And then you look at the ETFs for precious metals. Like 5% of the supply is fucking ginormous, right? But it's still like, there's still a lot of other factors in that other 95%, which is... And the most amount of coins are still in the hands of the individuals. Whereas precious metals has had thousands of years to consolidate in the hands of the few. Like, gold has been a vehicle of consolidating wealth from the many to the few for way longer. And you also have, you know, Saylor, who almost has 5% of the supply. I mean, he hasn't announced that he hedges, but I don't know. I imagine that he doesn't, at least from his rhetoric, that he doesn't hedge. I mean, the proof, I guess, outside of the rhetoric would be where he buys it. The second the guy gets more money, he just starts smashing into the market. He doesn't care if he's buying low. He believes so much that the price is going to be worth so much in the future that the second he can buy more, he's going to buy more. It doesn't matter if he doesn't want to buy low. He just wants to buy at the current price because he can. That's an indication outside of rhetoric that leads me to believe that he's not hedging, because a lot of market participants who do look to hedge don't just enter wherever they want to enter, right? There's some qualification or quantification of where they would look to bet against their holdings. But I think you're right about that. I think we're still early, right? I think Bitcoin will eventually reach a point where most of the coins will not be in the hands of the individuals. And once we reach that point, then we will be in a long period of consolidation. But I think we're still far from that. I think, you know, emotions still play a huge factor into how Bitcoin moves. Of course, liquidity is a huge thing too, right? Global liquidity and all that jazz, but Bitcoin didn't get to where it was because of the money supply. It certainly helped it in terms of valuing against dollars, but in terms of mass adoption and how well it's performed against that money supply, at least over the last, since origin or whatever metric you want to use. Market movers are still Paolo and CZ. So guys, CZ doesn't have that much influence on the market. You guys have probably, which chart should I leave open while I talk about this? Let's go to the 4-hour on Bitcoin because we have 45 minutes left on this candle. We want to regain right here, so we want to regain this. Yeah, CZ doesn't have as much influence. So if you don't know who CZ is, he's the founder, pretty much complete owner of Binance, the biggest crypto exchange. He does have some influence, but not as much. Nobody really has that much influence. I mean, for instance, if Trump was to say, everybody go buy Bitcoin, right? It might move the price a little bit, but usually the price will come back down in the days or weeks following, because the most sophisticated market participants are not buying and selling a financial instrument based off of what one person says. I mean, some do, right? But the thing that matters the most is being able to read the supply and demand on the price chart. If you're not buying and holding for 20 years and you actually want to actively participate in the market, you have to rely on the supply and demand in the price chart more than anything. If you're looking at common stock and you want to be like, if you want to look at the fundamentals, the balance sheet, earnings, and all that jazz, you're looking to buy and hold for a long time, because just because a company is predicted to have good earnings, or a company has a good balance sheet, or whatever fundamentals you want to use, that might not be realized by the market till way later down the road. So any kind of active market participation, I think, the vast majority of the analysis should be done using the price data, the price chart, and understanding how to visualize supply and demand in that chart. And there's a bunch of different theories out there about how you do that, right? And most of them, in my opinion, are not that good. I think the best way you do it is you wait for leveraged positions to feel the sting at the same time, and then you look at how the price reacts afterwards. I think that, and in crypto, it's a blessing, right? Because there's so much leverage relative to the to the spot market. Whale watch alert, Twitch streamer says CZ has no motion in markets. Okay, if CZ started to shill, a market cap that has like $1 billion, right? Like $1 billion market cap. Yeah, he could pump that shit by just mass tweeting out about it. I believe that's what he did with Aster, right? But, you're gonna get a big pump, but then what comes after is you get an all-time low after the open. Thoughts on PayPal? Oof. Yeah, structure broke, retest dump. Oh, I see what you're looking for here. Yep. That's a pretty good divergence, Splack. Risk reward's really strong on this too. So the risk reward is so strong on this that you'd have to really lower position risk because the probability of working out is really low. The probability of this working out is really low. And I'll entertain the gap people in the chat. Let's say it does go for the gap, right? I mean, really all you're looking for is this because it's the high that created it. But for PayPal, if you do follow the gap, I mean, look at the risk reward on that. 32 risk reward on that trade. You'd have to, risk really little amount because the odds of it working out are really low. But if it does work out, it could turn into a monster. I like this idea though. It's a good find. It's good volume on the dump. Divergence printed. Let's see. Yeah, in the next hour and 30, you should have another confirmation of the divergence printing. And then, yeah. And yeah, PayPal looks pretty good. But still, you need really good risk management, like I said. You would expect this trade to lose. You're assuming that this trade will lose at 32 risk reward. I mean, even if we went for the proper area, it's still a lot of risk reward. It's like 9. Yeah, keep scanning the market, Spaccavelli. This is a good find, man. Whenever you find something like this, just let me know. CZ, but didn't CZ force prices down to liquidate FTX? He intentionally sell FTT, so no way he didn't know FTT is a Ponzi. Yeah, I mean, I don't know. I don't think anybody knows for sure. I wouldn't be surprised. It's the same thing he's doing with Hyperliquid, right? I don't think it's him. I think it's the Binance core, like the C-suite of Binance, and probably their board or whatever, but it definitely feels like... There we go, Bitcoin. It definitely feels like it could be a targeted attack. I mean, if you look at Aster, right? Aster is Hyperliquid's big competitor, and he shilled the fuck out of Aster. I think you have a good product if Binance wants to crush you. It's the same way like any big company work. Like think about like Amazon, right? Amazon has crushed so many competitors, and they're only willing to go after certain competitors if they have a good product. Otherwise, what's the point? But it wasn't just... It's not like Binance can just shut down FTX, right? FTX was extremely exuberant. They were too aggressive, and they led themselves to be susceptible to influence from Binance, whereas Hyperliquid is much less aggressive. And because of that, it's not easy for Binance to take them down. Like if you look at the Hype coin, right? While the whole market was dumping, Hype went up. This is a bit of a red flag though. Right here. Because you didn't crack any bear structure. Aster is doing pretty good these days. Yeah, I mean, it wouldn't be surprising if Aster does relatively well, but Hyperliquid is probably gonna still beat them. There we go, Biddy. Where are we looking at? Okay, so for Bitcoin, we're trying to hold structure right now. Let me show you. So 4 hours is going to close in 35 minutes. We want to close above this line. or the previous low where longs got flushed. And then we want to hold fluidity. So this line over here comes from over here. It's so that we can build structure. So we want to hold that, which shows good fluidity so far, which is, it's not bad. It got a little bit messy down here. Sometimes it's hard to grab the position, but on the 1 minute, but it held it. Now we're holding above this, which is important. So we're holding above this, which is the local, which is important. And then the final one is the high time frame here, which we're fighting for at this moment. You do all of that, you can start building structure. And then the next area after that is right here. Which if we marry that with the local, is approximately right here. So I know this is a lot of lines and I'm kind of getting fancy with it, but it would look something like this. So reclaim this, right? Manage to test the bear structure, hold this, and then crack the bear structure, which would occur above this high. We still have a long ways to go, but that's how you would start to rebuild a bottom here. And the reason why this is important is because it's the topside bear structure, so I should color code these lines so they're easier to see, but I'll do that right now. If this, and then you have this, which is where the bear structure gets cracked. So on the way up, marking out all the areas where shorts got squeezed or you had exchanges of liquidity, and then the validity of them on the way back down. And that'd be like right here. So this structure here gets damaged if you can retest this. And a good shot of retesting this is building a good bottom structure. So that would be the route to getting a high higher than this high, higher than 72,000. Because right now a lot of the selling that's coming in isn't necessarily a good area to short it. I think it's just a lot of panic and riding the momentum downward of the spot market. These ones would be red too, but I guess mark it out so people that join late can see. But if you can't hold this local structure here, then this is the last hold down here before we get a new lower low. And every time we test an area like this, or we test an area like this, you run the risk of it breaking either way. So if you're bullish, where we're at, this is the road to higher. If you're bearish, then it would be a rejection here, like that. A good short is when narrative turns that Bitcoin is back. Yeah. I mean, a good short is just, like, if you wanted to be patient for a short, it would be right here, if you don't have one. And if you want to be patient for a long, I mean, right here is not bad, but it's kind of aggressive, like right there. So you get a short from here, then you cover the short from here with a long, and then price could go either up or down, it doesn't really matter. Or if you're brave, you would long it here, but you know, it's your own trade. You take your own trades. So far, the local structure looks okay though. What we just saw in the 1 minute was all the short sellers right here. We just pop them, and now we have to see, does it fail back underneath or does it hold it? For those of you that are not familiar, the chart on the left is the 1 minute, so every candle represents 1 minute. The chart on the right is the 15 minute, so yeah, every candle represents 15. But as far as like, you know, what caused the crash of FTX, I think it was just exuberance. Which any company or anything in the world of risk, that's usually how it gets punished, is exuberance. And by the way, if you do crack the bear structure here, it doesn't mean you can't get a rejection of some sort. But if you get a retest there, you're going to send it. It could dip back down and we could retest the next bear structure, which would be here. This gets kind of convoluted, but then you hold that and you can send it. What do you think of farming funding rates on Hyperliquid? You can get 10% shorting Bitcoin and MSTR. What do you mean, like the funding cycles, or? I haven't looked too much into the products that Hyperliquid offers, so I'm not sure what you mean by farming funding, unless you're referring to the funding cycles. I thought FTX crashed because they were using their funds to prop up a sister company. I think one of the main reasons they crashed, and by the way, there's somebody who's probably way more studied on this than me, but I think one of the main reasons was they were taking too many discretionary bets. I think the rumor was the SBF's girlfriend was taking like huge speculative discretionary. Yeah, Caroline did not use a stop loss. I think that sums up what I'm trying to say. Yeah. So discretionary trading is not bad, but it must come with risk management. If you are trading based off discretionary with zero risk management and you're just all in, yeah, I mean the market at some point will turn against you. It could be shorting, it could be longing. Hyperliquid uses the funding rate, where longs have to pay shorts 10% due to price difference. MicroStrategy sometimes has a 100% annual funding rate, which means if you have a short position... Oh, a year? Yeah, that sounds about right. I mean, most funding cycles will average out at 0.01% every 8 hours, which is better because it compounds rather than just taking the annual method. Like, let's look at the funding right now on Nance. Okay, the funding's not too crazy. Actually, all the alts are negative right now. But let's say you were shorting Bitcoin on Nance. Every 8 hours you'd be paid 0.0023%. And this changes, so sometimes it'll be negative, but the average over the years has been like 0.01 or a little bit less. Caroline was raw dogging the trades. Because wasn't there like a before FTX crashed, SBF put out a tweet like, what did he say? He's like, everybody keep opening and closing trades or something like that sort, because they needed the fees to add margin to their positions. Bugatti, there's not enough beers in the world for that to be a thing. Yeah, it is crazy, Embers. It's fucking crazy. I mean, think about it like this, right? If you had a short position from here, you've been farming funding for 4 months, 4 or 5 months. Every 8 hours, you get paid to hold that short open. Sometimes you have to pay to hold the, so not every 8 hours. Sometimes it'll be the other way around, but way more often is it the longs are paying the shorts. The one thing you want to be careful with that though is people get too attached to the funding, and they start to ignore the unrealized P&L. So they really want to keep their short positions open, especially if they're really bearish on the price action. Like if they believe in the 4-year cycle right now, then they think that Bitcoin's gonna keep going down for the next, I don't know, couple quarters. They really want to hold on to it. And what this does is it puts a lot of short sellers in the same spot, especially when you have that mirrored on the price action as well. So you have on the price action, you have a bunch of scenarios where this chart's pretty messy now, but you have a bunch of areas where price tapped it a couple times. So all these, there's clusters of shorts in all these areas, and none of them want to give it up. But if the price does crack it, then we'll see that imbalance of supply and demand I was talking about earlier. Quantum. Discretionary trading, which just means trading, like taking a bet on the markets going up or down, is the most difficult. Delta neutral strategies can be hard to iron out the details, but once you have a decent model, it kind of does the work for you. But speculating on if the price is going to go up or down in the next week is so hard that some people believe it's not, you can't do it. Because they tried and they weren't able to do it. And to be fair, in a lot of markets, particularly the stock market, it's pretty fucking random. Like if you were to take a random mid-cap equity, that price movement's really random. But one of the beauties in crypto, and I've said this a million times, is because the leverage market relative to the spot market is so big, that the chart shows you where people will be forced to close positions. You also have instruments where you can use 200x, 300x, 400x, 1000x leverage. So those positions, if you get enough of them in the same spot, they all have to close at the same time. It's forced liquidation. If you know where a bunch of people have to buy or have to sell at the same time, instead of guessing where people are going to buy or where people are going to sell, then you have a huge advantage when it comes to probability. If you knew where a ton of people were going to buy at the same time or a ton of people were going to sell at the same time, you could take advantage of that. But the big misconception is, um, let's say a ton of people are going to buy at the same time if the price goes to a certain level. So you're thinking to yourself, okay, if a ton of people are going to buy at the same time, if a price goes to a certain level, I'm going to buy at the same time they buy. That's where you'd make a mistake. And the reason being is because people are only forced to buy or sell at a certain time on the leverage markets. The spot market, people can decide whenever they want to buy or sell, and you don't have any inclination as to what would lead them to do that. Maybe some news or a war or something like that. But on the leverage market, there's going to be an area. And the reason why you don't want to buy when everybody's buying on the leverage market is because it doesn't actually affect the supply and demand of the underlying asset, which is the spot market. It temporarily moves the price, but it doesn't affect the underlying supply and demand. From a market maker perspective, it could have ramifications on the supply and demand when it comes to arbitrage market making between the two, but when it comes to the actual supply and demand of the long term, it doesn't change it. So instead, when everybody has to buy, meaning all their shorts get closed, when a short gets closed, it has to buy. When a bunch of shorts get closed at the same time, you'd actually want to look to open up your own short instead of after that sort of carnage is over and we see that there's an imbalance of supply and demand and the spot market didn't have enough demand to follow the move on the leverage market, then that's when you want to open up your short. So in simple terms, you wait for everybody to lose on the leverage market. You watch to see what the spot market does afterwards, because that's the true supply and demand. And if the spot market reverses, then you can open up your own short. Same thing is true for longs. If everyone's forced to sell on the leverage market, the price will temporarily go down on the spot market because of the market making arbitrage. But if there's not enough supply to match the move that was caused by the leverage market, then the price will reverse back up, and that's when it's time to long. So really, you're just sitting on your hands and you're waiting till a bunch of people are clustered in the same spot and they all lose at the same time, and the market just reverses from there. Easier said than done, but that's pretty much the premise of how you can get an edge on a heavily leveraged market. And I'm not talking about common stock or equities or something like that. I'm talking about crypto and Forex because of contracts for difference. So for instance, on Bitcoin, this was the low, right? So a bunch of people sell at the same time. Well, the price didn't fall off a cliff, it started to reverse. Now it still could, because we're in a huge downtrend on the high time frame. But the fact that it didn't here indicates a potential opportunity. We just want to see when the battles happen here, who wins it, and do they win it decisively? Because it's still a probability at the end of the day. This could still dump, right? But the fact that it didn't dump when the bottom fell out is already a indication that a lot of longs got squeezed out. At the same time, the spot market did not have enough supply to match that move that occurred on the derivative market, and as a result, the price reversed or mean reverted back into the range. I missed the 2021-2022 crypto cycle, Matt. Yeah, I think a lot of that mania that happened in the post-COVID rallies was just because everyone was at home. However, I wouldn't be surprised if we see that mania in the future. It just might take a little bit longer. We could definitely see rallies like what we saw post-COVID again, regardless of if there's another virus or not. It's just going to take longer of consolidating. (2017, 2018) was pretty fun too. The 2018 altcoin rallies were fun because there wasn't that many altcoins. So like you could literally pick in the 2018 altcoin rallies, you could pick any altcoin and it would fucking go to the moon. Now there's a million meme coins created a day, but I still think we'll eventually see meme coin money rotate into more quote unquote utility coins, which calling a coin utility is already kind of a meme, but some of the altcoins do have some practical applications. Yeah. The 2017 Bitcoin rallies pretty much started the crypto Twitch thing. Crypto Twitch, like Twitch, people streaming on Twitch for crypto wasn't really a thing till 2017. Utility coins, the whole market is a meme. Oh, there's some adaptation in the real world from altcoins. And there's some altcoins that do generate revenue, but they're still on the back of Bitcoin. Like you still need Bitcoin to be a thing for any of these alts to exist, right? And the good news is Bitcoin will probably forever be a thing. Once you cross the 2 trillion market cap with 15 years of existence, it could go down and it could spend a long dark bear market. Sure, but it's pretty hard to call that it's going to go to zero. I don't think that's... I think people who say that Bitcoin's going to go to zero are speaking from a place of emotion. I think they're just upset about the idea of Bitcoin. But if that's the case, then they should apply this same strict ideology to gold and silver. And honestly, if we're being fair about it, they should apply that same logic to the US dollar. If you think Bitcoin doesn't have any value because it doesn't produce anything, then you'd have to apply that same, stringent mentality to the US dollar. Because the US dollar is what? It's just a medium of exchange. It's not a store of value. Although it's believed to be, it's just a medium of exchange. Its use case is that it can move value from one place to another. It doesn't mean that it is value. But being able to move money from one place to another can be argued. You can argue that it's value. And the same thing with Bitcoin, same thing with gold. Except the difference is Bitcoin and gold are not debt. The dollar is just debt. You think Bitcoin's going under... If Bitcoin goes under 16K, and I don't think it'll happen, by the way, but I'll entertain it. Let's say that it does. We'll probably be in a bear market for a long time. Not just the 1 year cycle, right? It'll be way longer than that. I don't think that's going to happen, but why not? Because you don't know the true demand of the market until the price reaches, until you have the price go lower, you don't know what the true demand is. The order book is not going to tell you the story of what the demand is. Look at it like this, right? When Bitcoin was here at 77,000, you had some icebergs. It wasn't until Bitcoin broke pretty much underneath 70,000 that all of this demand came out of the woodwork. If and it's the same thing that you can say with going higher too, right? Like if let's say Bitcoin breaks above 75K again, you're gonna have a bunch of sell icebergs up there as well. Like what's resting in the order book right now is not indicative of what the true supply or demand will be when the price reaches that area. You have TA for it. So you want to hold these areas and then you want to wait for retests of them. So like I said earlier, if you're brave, you could just punt it. But what you could do is wait for this and then enter here. And if you don't get your entry here, then you wait for this, or you look to short it. But the reason why you're waiting is because you want the better risk reward. A couple of years ago, I used to show trades on stream. I got a little bit more popular in here though. Just have the whole chat share the same stop loss and entry. The 1 minute, I have the 1 minute up right now because I'm streaming. Most of the time I don't really look at it. So if I'm like, I don't know, if I'm really interested in scalping on the day because we're at a really good level, I'll look at it. But the main thing I'm looking for here on the 1 minute is, are we holding the local structure? But that's not as important as looking at the high time frame. And this is not even high time frame, right? It's 15 minute. But a safe way you could do it is, and this gets kind of complicated because what I'm going to say might sound like simple, but you look at the 4 hour to, or the daily, but the 4 hours better, to derive a bias. And then you can use the 15 minute or the 1 hour to find an entry. You could do it on the 1 minute too, but it's way more difficult. And the reason why it's difficult is because let's say that you wanted to take it at this low, right? And this low is all the way from over here. That's what this line is right here. It comes from the 5th. So exactly 1 week ago. You take the first one here, get stopped out. Try again when it regains it, get stopped out. Try again a third time and it finally works, right? So you have to eat these 2 losses and the third one works out and pays for the 2 losses. Sometimes it'll just be like this, right? And it'll just reverse right from the tick, but you need to be in a mentally good spot to be able to just take 2 losses within 15 minutes, 30 minutes, and then still take a third stab at it. And the worst thing is when you take the third stab at it and you lose again. Because then you're thinking to yourself, well, I just, lost a portion of my account. I really need to get it back. Let me try and short it now or something, and then it reverses again. So mentally, you have to be in a really good spot to be able to trade the 1 minute like that. But you can see like the level that I'm using, you can't really see it unless you do this to the chart, right? It would take forever to get back there. So that's why you use, and this is when, let me go back to what I was saying with the 4 hour to find direction. Sometimes you actually do have to zoom in to find it. Like this level here, I couldn't see this on the 4 hour. Sometimes it's really obvious and you can use the 4 hour. But when it's super volatile, like Bitcoin has been super volatile, you have to zoom in a bit to find it. And all I'm looking for is just the staircase down. So the lows that were formed before we got the reversal, this would also count as one as well. And then I'm taking these and I'm applying them over here. And then you can apply them even more by zooming into the 1 minute, which is this structure here, just zoomed in right here. It's the same thing on the other side too. The staircase up. And this one you can't even see unless you zoom in. And it's happening on a big time frame, on a small time frame. Now, let's say once you've established all these, right? So this one, for example, which just happened earlier in the week. So you've established the staircase up. You see the retests happen. If you return to this, you break the bear structure. And this doesn't happen very often. It usually happens on the inverse. But if you break the first area of the bear structure and then you get a retest of it, that's really strong. The bull side doesn't normally happen like that, but on the bear side it happens like that. So if we end up building the same, so you see the bear structure, right? If we start building that, the bull structure down here, and we do the same thing, you don't want to return to it after it's been done, because then you can start to crack it, the structure. So you want to maintain the structure. If it was so bearish, right, then there would be no reason for us to trade back up at 69,000. Right now we're trading at 66,000. If it was so bearish, we shouldn't be able to get back to 69,000. But if we are able to, then it starts to crack the structure a bit. And the cracking of a structure, you know, isn't a guarantee. Like if we were to get back up there and start to crack the bear structure, it's not a guarantee that it's going to pump. It's just a probability. It could still dump because we're in a huge, massive downtrend. So the 1 minute, the next area you'd have to hold this. Which is this low. It's approximately 65,552. Because it's the same thing, staircase up, right? Yeah, it'd be this one on the 1 minute. But 1 minute structure isn't, you know, as strong as like a high time frame structure. Because a lot of cheeky stuff happens on the 1 minute, as you guys are well aware of. It's better when you have high time frame structure to yield too, because the probability of working out is way higher. And we just had the 4 hour close, so we're gonna get, hopefully we'll get the bottom wick off rip here. So the 4-hour just closed, new one just opened. Normally we see a bottom wick come in on the 4-hour. It's better if it happens earlier. So basically, it's better if the dump happens now than later. There is a world where we don't get a bottom wick on the 4-hour, but it's pretty rare. By the way, like any concept I talk about, or any concept that anybody talks about on the internet when it comes to trading, there's no 100% system. It's all probabilities. You can't, especially if you're new, what a lot of people try and do is they try and find this constant search for, like, the holy grail of trading strategies where if I just research enough, if I just analyze enough, then I can find something that's always going to work and I don't have to worry about risk management. The hard truth is that nothing always works. There's not one institution out there that trades that wins every trade that they enter. There's not a trader out there that trades that wins every trade they enter unless they've only taken, a handful of trades and got lucky on some of them. But if they've taken like 100 trades, no, they've certainly lost a lot of those. So anytime I say like, oh, this is what we need to see for it to pump, I'm saying this is what we need to see for there to be a probability that we pump, not that we're going to pump or that we're going to dump or whatever. Big institutions do not use stop loss like FTX. If you're an institution or a retail trader or whatever, and you don't have an invalidation for when you're wrong, your days are numbered. Because even if a company or even if whatever instrument you're trading fundamentally looks solid, like this is actually happening to a lot of people in the stock market right now, is everybody's dogpiling into the Mag 7, right? So companies that have good PE ratios, that have strong futures by their metrics of analyzing what a strong future is, are not performing nearly as well as just dogpiling into Tesla or Apple or gold or silver. So you could do all the fundamental analysis in the world until the cows come home and still be outperformed by just some random retail guy who bought Apple or bought Tesla. And we've reached huge, like that dynamic that's occurring that I'm talking about, that we're reaching extremes when it comes to that. Extremes that we haven't seen in a long time. Pretty much we're getting, I haven't looked at the metrics that closely, but I would argue that we're probably closer to that dynamic being closer to like the .com era of just everybody dogpiling into the winners. This is what happens though, right? Like you look at like the Nifty 50 or nowadays it's the Mag 7. Everyone just wants to keep buying the winner instead of respecting fundamentals or whatever. But that's the thing about fundamentals, right? Like they're useful, but if you want to outperform the market, like the S&P 500, you probably won't realize those gains for a long time. It's because, like, human emotions play a big factor. And plus with there's so many more retail traders nowadays than there ever was. Still waiting for the retest of 21k in range and NQ. 21k, jeez. Gotta come down a good amount, huh? You looking for this? Maybe. I don't know if you'll ever get that. You'd have to see like a 2022 move. Did the ETFs absorb all the dumb money? I think the ETFs are, there's a lot of retail in the ETFs too. If you ask me though, and this is gonna sound controversial and maybe I'm being a little bit of a dick, but we give these institutions so much credit, the ones that have a lot of assets under management, but really the only reason why they're considered smart money is because the US dollar goes down. If we were on the gold standard and we didn't have inflation, most of these institutions would not exist. They've just massively benefited from the devaluation of the dollar, and their clients that invest into these funds and institutions that invest in them think that they're doing really good, but they're not. They're just breaking even because of inflation. It's because the average person, well, nowadays it's a bit different, but years ago, the average person didn't really care or understand inflation. So if they saw that they were getting a 10% return every year, they'd think that, you know, whoever they invested their money with is a genius. But in reality, the only reason that they're getting that return is because the dollar went down. They're not some fucking market wizard. They just buy, hold, hope that the government keeps printing. And the odds are the government will keep printing. So to answer your question about like the dumb money, I guess, yeah. I would say like the dumber money. If you didn't have inflation, there would be very few that could beat the market. What do you think about 1880 long for ETH? The ball is still in Bitcoin's court right now. Let me see, 1880. You looking for this? Oh, you're looking for this. This is a cheeky level to look for. You're out here sniping, Splack. I'm already seeing imbalance of supply and demand on ETH here a little bit. Yeah, that's not bad. I don't know if it's gonna... Maybe 4-hour divergence. Will I be streaming more often? Yeah, most likely. Lines up well with the Bitcoin at 62. Is that what you're saying? Let me see. Do you have a chart, Splack? You can send. Don't scare everyone, but you're right. Still waiting for a retest. Oh, I already read that. Yeah, honestly, if we retest 21k on NQ, it could be a lot deeper than that. Cancel. I don't know if you'd want a resting bid there. It might be one of those spots where you just market smash in. Sorry, that cough was probably pretty loud and scared some people. Come on, ETH. God, ETH just does not look good. ETH, stop it. You're gonna pull down Bitcoin a bit. All right, let's get some chat participation. All right, do you think Bitcoin is more likely? I'm gonna make this yellow. Do you think, put a 1 in the chat if you think Bitcoin is more likely to go above this yellow line before it goes underneath this yellow line. Put a 2 in the chat if you think Bitcoin is more likely to go below this. So if you think it's more likely to do this or do this. 1 or 2. Let's see what the chat thinks. Who's brave enough to say what they think? Oh yeah, we can also play marbles later too. Usually the chat is 50-50. Whatever I say, it'll do the opposite. Oh, we got some more 2s than 1s. Where are the 1s at? Is everyone bearish? All right, youth, you know what to do. Say the number you think, and then take the opposite trade. What do you think? I'd be leaning more towards 1, except for what Ethereum's doing. Let me look. Okay, so the volume on Bitcoin 66, ETH is 44. All right, I'll go with the 1s. I'm gonna go with the 1s. We just do you guys think that bottom wick on the 4 hour is deep enough? Maybe a little bit deeper, right? Compared to the previous bottom wicks. What is an MSB? DOS, what is an MSB? Market structure break? Is that ICT stuff? Oh, I don't use ICT stuff, but I feel like some of the concepts that's in ICT is similar to stuff I use. Maybe we just use different terminology. What would constitute a market structure break for you, DOS? What's up, Shazam? All right, let's look at Shazam's chart. Yeah, I see this. Or I'm sorry, Splack's chart. Yeah, this is a cheeky level. Wait for the new daily wick and then sweep long it. The issue is just the onslaught of selling because the fear. Let's see how the S&P is doing. Yeah, the S&P is making it a bit more difficult. Now, if we do a full body candle above 66.3, yeah, but what time frame are you saying candle close? Because I don't use candle closes, but I'm interested. Like a 1 minute candle close, 3 minute. $66.3. Or are you talking about like a daily? Prefer a 30 minute. We wick 66.3. And then close above on the 30 minute. But isn't this already happened though, right? Oh, 66.3. Okay. So get above here, then close above here. That makes sense. I mean, you'd squeeze out a lot of the short sellers and you'd maintain the demand on the spot market. My only issue is what makes a 30-minute candle so valuable? Ethereum's really being a party pooper right now. Same thing with the S&P. Making this Bitcoin rally that much harder. So most of the chat, because even Liquid is saying lower either today or tomorrow. Chemist. How do you think most altcoins are doing right now? Oh god, flashbang. Market structure break I'm looking to get past. Can you define though, like what you mean by market structure break? Oh god, not another flashbang. I'm just trying to figure out like why is your line there? Or why was your line here? Because that's a higher low. Wouldn't anything above this be a higher low though? And if we break that higher low, it means the structure broke bearish. So you're saying claim this, form a bottom here, and then, oh, you guys can't see it on your screen. So you're saying get above this, hold it, and that's the higher low. Oh god, everything's zoomed out now. I kind of get your logic, but I'm just wondering like why is the higher low there? Like what makes its confluence with 2024 VWAP? The VWAP, from my understanding, is for like accumulating or just distributing in a more aggressive way. Like if someone wants to offload a lot or buy a lot, they would use a more localized VWAP instead of using like a high time frame VWAP from 2024 or something like that. Oh, I don't have VWAP saved. Is this what standard deviations? Did they default this to standard deviations? So if you were to take this long, again, this is an aggressive long, but if you were to take it, something like this, and then profit targets, you'd spread them out, right? Just know that the probability of this trade working out is pretty low, because the risk reward kind of starts at around 4, and then you can get a lot more after that. No, I know you can zoom out with the VWAP like you can with like a moving average, right? But I'm just saying, like, the validity of VWAP and why people like cling towards it is because it's understood that, at least it's an old school way of like distributing or accumulating large positions, especially if you're doing it on legacy, right? Because there's rules in terms of like how fast you can dump something or how fast you can buy something. In crypto, not really the case, but at least on the bigger exchanges. But you don't know if somebody's distributing or accumulating a large position unless it just keeps bouncing off the VWAP. I mean, you could have a tighter stop loss than that, Roel. If you wanted an even tighter one, then you would use this. Instead of this. But like any trade, the tighter the stop loss, the higher the probability that it's not going to work out. When it comes to crypto, do you usually take longs and shorts at the same time in multiple coins? Or they tend to fall on the same side because most coins follow Bitcoin? If you do want to open up multiple longs, you have to look to short as well. Wasn't always that way too. But now everything's so coupled together from a sentiment perspective that if you were to long like 5 different coins, that's the same as just taking 5 times the risk on one coin. Or it's really similar to that. Every once in a while you get like a Zcash or a Hype or a Monero that decouples, and even Bitcoin Cash. But most of the time they all kind of couple together, and it's really evident when if the Bitcoin market goes down a lot. What you doing, Bitcoin? God, look at that 15-minute on the S&P. Bitcoin just cannot catch a bid because of keep retreating because of the stock market. Stock market's having a 1.3% day. That's pretty bad. Doesn't that leave you with low amount of opportunities nowadays? Yeah, kind of. It does. It does. That's true. But you know, crypto's not the only thing you can trade. And if you did want to, you know, open a lot of trades, like I said, you would just hedge it. The classical hedge is just long Bitcoin, short altcoins. S&P is not going to be open for too much longer. What's up, Tom? It's been a while, Big T. What you got cooking up over there, Tom? S&P is getting close to the lows. What do you think about supply and demand trading? When you say supply and demand trading, are you just saying like this kind of stuff? Because I think supply and demand trading is a patented strategy by Trading Academy, I think. Last candle before an impulse has a buy zone. But what time frame are you talking about in terms of the candle? Supply and demand is like any TA, you will have to pair it with other confluences that you've learned how to use. But it's such a generalized terminology, just supply and demand trading. Like, what are the rules? And when you're talking about last candle before an impulse, what time frame candle are you talking about? You can use it everywhere. Yeah, that's the. I think I know which one you're talking about. That's the patented strategy from Trading Academy. Which is crazy. You can patent a trading strategy, but you can't really enforce it. Where did you learn that from, Roel? Because I'm almost certain that's where it's from. By the guy's name was Sam something. He traded, or he was worked at the Chicago Exchange in like the 1980s, and then patented a strategy, supply and demand. I think he dealt with like the order flow in the 80s or something like that. Can't remember his last name. I mean, the methodology does have some validity to it. Because it focuses on good risk reward and waiting for price to come to you. Those are both good. And to be honest, the way the market's been trading these last couple of years, that strategy, I can just see it from the charts, has probably been really advantageous. Because what has the market been doing these last couple of years? It's just been doing equal highs into equal lows. So supply and demand people have probably just been grabbing all these. The issue with that is it doesn't turn into a runner. So like if you leave behind equal lows or equal highs like that, you're just leaving behind a lot of retail invalidations in the same spot, which the market almost is a magnet to grab that liquidity. So it's fine for scalping, but if you want like a scalp to turn into a monster, the probabilities of that is a little bit lower. I guess if you're doing supply side, that's been more advantageous than demand side. Like Ethereum, for instance, loves just printing these double tops and then continuing the dump for a long time. It's waiting for filing imbalances and enter your zone. Then you wait for confirmation or reversal or anything. What do you think of 56K from the previous structure? Most of this stuff's already done. 56 actually looks pretty good. Does that line up with a bull div? That does line up with a bull div, I believe. RSI would still be likely still be above 16, and that would look like a good daily. Yeah, Tom, if we do end up getting that lower low on Bitcoin, and no, I don't think it is a stretch for the bull div. If the bull, because it's not that much data in between. If you get RSI above 16.5 while testing that, I mean, it'd have to come in like the next, I don't know, the next like, sometime within the next like 6 or 7 days. I'm kind of just eyeballing it. I guess sometime in the next week, and you get the lower low retest of that, plus you get a bull div that could mark the local bottom for a while. I like that. I wasn't even looking at that level because I was just gonna wait to see what happened if we did this, and that does line up with around 56.5. 56.5 is kind of a stretch, but it might still look good. Yeah, this one not so much because it's already been done, right? The 53, and with the 56.5, at least you get the bull div with it, most likely. That would look like a pretty clean bull div. Next week sweep on Monday marks the low. You're saying that we're gonna get a lower low directly on Monday? I mean, if all the stars align, Monday lower low would be fine too, as long as the RSI doesn't go under like 17. One of the mods banned 6-7 in the chat, which I'm not opposed to. I think I asked them to do that probably. All right, let's pump it. No, it wasn't for the link. It was the it's 6-7 being banned. God, it's so hard to pump it when the SMP just wants to behave like this. What did you guys think of the Super Bowl? I guess a lot of the Europeans in here probably didn't watch it. If there's any Americans in here. What the fuck is a Super Bowl? Yeah, defense was just running the game. I don't watch football very often, but I'll watch the Super Bowl, and Seattle's defense was just carrying the whole team on their back. That's exactly what it is, Santa Minis. God, the stock market's just getting beaten up today. I think it's probably because the Mag 7 is down so much. Apple's down 5%, that's pretty odd. Yeah, the S&P is struggling a bit here. All of the Mag 7 is down today. But even with the Mag 7 being down so much, you'd expect the S&P to be down even more. Like right now, Tesla's down 2.6, Apple's down 5.3, Amazon 2.5, Google's barely down 0.7, Nvidia 1.5, Microsoft's also barely down at 0.35, and Meta's down 2.5. If I'm remembering correctly, did you used to save the VODs in this channel? Did you deactivate it? Just got home and wanted to see the session from the beginning? They get posted on YouTube now. Because Twitch deletes my recordings after 60 days, but YouTube never deletes it. At least I don't think. Or it might be 90 days that Twitch deleted it, but they don't archive it for that long. Alright, S&P new low on the day. Someone's trying to keep Bitcoin up right now because it didn't make the new low like the S&P. You need Sailor to hold the line. We just need the OTC guys to start accumulating to sell to Sailor. NQ is mounting a little bit of a comeback. It's just the S&P. Silver's still in free fall. S&P is not going to be open for too much longer. 10, 20 minutes. Did VIX finally tag it? Oh, it's really close. Yeah, boys, the Bitcoin long is struggling. The S&P is just relentless today. Someone call up Sailor. Tell him to start bidding the market. I wish Sailor would bid the lows instead of just market smashing the top. But I think he does everything OTC. I think they mentioned that they might be, MicroStrategy might be buying from the spot market in the future. Oh my god. Did you guys see that though? I'm pretty sure the CEO of MicroStrategy was saying that they're going to start bidding the spot market. Not sure if you commented this, but do you think AI will ever dominate trading? Or is it because AI can't feel that AI won't take over trading? Well, the AI out there for like commercial use is probably not up to par. And then the black box systems usually do well for a while, but then eventually go obsolete. But yeah, maybe. I don't know. There's AI is still like, it's very smart at some things, and then it has some flaws in other things. You can't really like have any room for flaws in a trading bot. The alts are still doing pretty good though. I don't know. What do you guys think? Do you guys think AI is going to take over trading? Or has it already? There's a meme in the general chat on Discord. Yeah, it's just I feel like AI at this point is just it depends on the developers like values and I mean with the popular models out there when it comes to AI, did they get rid of it? This is how they performed. So ChatGPT was the only one to get a return, and the return was 1.5%. The rest of the AI models, DeepSeek, Mystery, Gemini, Kimi, Grok, DeepSeek, Cloud, they all, and Qwen all had negative. Well, it looks like Mystery, Situational Awareness did pretty good, but this is the how the AI models fared on the market. Almost all of them didn't net a return. In fact, some of them had drawdowns of 97%. Of course, this is like the commercial AI out there. Probably soon it's different. Yeah, but that's what I mean, that's what they've been saying about AI, right? All right. Bitcoin didn't take out the low. So the aggressive longs in the chat are still alive. For now. Grok with the Giga Chat. No, Grok didn't. I think Grok did good in the previous season. Oh, these are absolutely the paid versions, man. These aren't the free versions. The thing is, like, the quote-unquote AI that probably has success in the market is probably just delta neutral strategies. So like Citadel and others like that. I mean, AI is getting good, but if you've like followed it for the last couple of years, it's not incredibly hard to tell if like a video is AI or not. It's getting better to the point where it's harder to tell, but I'm sure in the future it'll get so good that it will, but in terms of like the future, what time frame are we talking about? Because a lot of the projections of where like AI is going to be in the future is backed by financial incentive. Like, how do you raise more money for an AI company? You have visions of grandeur that might not be founded in, you know, it might not be pragmatic. All right. A few minutes, we'll see a lot of volume hit the S&P as settling starts to happen. You put the chart into Chat GPT. Isn't there an AI that's like designed just for trading? The thing is though, like putting a chart in Chat GPT is limited. You're limiting how much data it can see. Did you hear that the EU will free India from tariffs? I did not know. What are the biggest imports from India to EU? What's up, Des? You see those new actor versus actor fighting AI videos? Insane. Yeah, I mean, I have no doubt that AI is going to get better quicker, but I don't know the time frame. I don't think anybody does. The good news with AI though is supply of commodities the abundance of supply within commodities should outpace inflation by a large degree, which means that regardless of inflation, prices of commodities should eventually come down. I think it's probably in further out in the future than people think, but all right, S&P is getting ready to close. Because like with robotics and stuff, it's going to be easier to farm, to refine products. The farming and refining, even distribution. If you have like autonomous trucks and stuff, like Santa Minis. I think that's also true for Canada as well. I don't know if I'm allowed to read that message without Twitch banning me. That's funny. All right, S&P is closed. ES is still in free fall. Still at a premium though, like normal. God, ETH is looking rough. It's gonna be hard for Biddy. Yeah, this one should be uploaded to YouTube. I don't know where Leo is, so it might not be till tomorrow. A Canadian firm, you have no idea how many Indian colleagues I have? No, I believe that. They're hard workers, man. Yeah, I am, Tom. I have a feeling if I end stream, this Bitcoin long is toast. The Tether militia is just gonna start closing. Come on, Tether militia, you gotta pump it. It was good, cancel. The weather was nice. Looks pretty fragile regardless of whether you stream or not. Struggling to lift, yeah. And the S&P just made it impossible for Bitcoin to catch a bid, and then ETH is ETH structure looks pretty bad, so that's also not good. This is one of those examples, by the way, Tom, where it technically is bull div, but it's not a super clean bull div. Win marbles. We can run a game of marbles. I think I told you guys we'd run one when I got back, right? Alright guys, marbles is getting loaded up right now. Should be a good one today because there's not that many people, so better odds. I am stuck on a loading screen. I'm gonna try and restart it. Uh-oh. Yeah, it's a little wide. And usually those bull divs look best when it's a new low instead of a higher low. Traxy says 35k on. How do I? Sorry, I need to turn off Discord notifications on the game. Give me a second. Okay, there we go. We're gonna do the OG map. Yeah, I don't know about 35k. Just one step at a time for me. We'll see. Alright, exclamation mark play. It's getting started right now. Here we go. If you're new here, you're about to figure out how this works. Let me make sure the Bitcoin price action's still on the screen. Alright, boys, we're starting up marbles. I think the YouTube stream can see it too. Let the people know that just come by for marbles that we're starting up. Yeah, make sure that you boost your marble. Exclamation mark boost. Come on, you guys ask for marbles all the time, and you're not joining. I need to set it up so the YouTube people can join as well. I'm not sure how that works. Or if you can even do that with marbles. Alright, I'll give you guys like 20 more seconds to join. Fuck the YouTube people. YouTube, they're talking shit about you. Alright, good luck, guys. Here we go. If you win, I'll gift you a sub to the channel. You can also pick a ticker for me to analyze on stream with everyone. Oh, you just missed it, Tony. Alright, here we go. My marble doesn't count, as you guys know. So it's going to be Zorba who has the lead right now. Youth is right behind them. And we got EU, Richie, and Tom in the top on the south side. But they're going to run into the UFO here, so the north side crowd is a pretty big advantage heading into the crop field. What are the YouTube people going to do? Like and subscribe us to death. Alright, Ghost Unit 42 is now our leader on the south side with Axor. EU still holding on to it. Alright, here we go, into the crop field. So as you guys know, if you hit a corn stalk while going through this, the rest of the pack is going to catch up. And we see a couple people hitting them right now. Youth with a great line gets through all of it. Let's see if he can skip the hay bales as well. Gets blocked up on a hay bale a little bit. And Mo Low in the top three. Only 2 people have gone down. I think one of them was my marble too. Just Stav, an OG of the channel, is battling with Youth on the south side. Mo Low leads the pack on the north side. So as you guys know, this platform moves a bit. So even though some people are in the front, they're still going to have to be in the right spot where when the platform's moving. We also have the UFO that can come in and scoop some of them up, which just happened over there. So Molo going to be the first one to go for it. The platform's going to be in a good spot, and it is right now, but will it be there when he gets there? And it looks like it might be. He's on the lip. He didn't go through, and he falls off the map, so now it's anybody's game. Same thing with Stav falling off the map. It might be EU Moist, and it is. GG. If you didn't win, remember to type rigged in the chat, as usual. Alright, EU, you know how this works. You've been here for a while. So either give me a ticker or just say chat, and then the first person in chat can pick. We're so back. It's rigged. Yeah, remember, if you don't win, they get super mad about it, boys. That's how this goes. Alright, So first person to put a ticker in the chat is the one that we'll all look at together. If no one does, then I'm just going to look at chat USDT, because I'm sure there's a coin called that. Alright, UBI. Is this Ubisoft or is it a coin? Oh, it's Ubisoft. Yikes. This is a, believe a gaming company, right? It's a good volume spike, but it's almost like catching a falling knife right now. Wait for these lows to be cleared and then wait for this. So you're gonna have a lot of panic under 4.113. And then that panic should lead to a big sell-off because everybody sees this as support. This is the invalidation of where a lot of people are saying that it should hold, right? Most people expect this to happen. If it does sell through and we don't see a huge sell-off, but we see a bounce that's rather insignificant, and then using this level here. This level's from, let's see, it's from 2002. We never had a proper test of it before liftoff, so it would signify if the dump isn't significant, then that's signifying accumulation paired with the fact that we could see good fluidity at around 2.846. So right here, this could lead to something. But if it just sells through, then just more knife catching. It's not worth trying to grab it. So if it just goes straight through, not worth trying to grab it. If we do see, and this might take a while. This is the monthly candle, so this is kind of a slow play. Does that work, Exor? Are you still holding this thing? It's actually quite unfortunate how much it's dumped. It's down 95%. It's brutal. It's got Cardano-like structure. Yeah, Cardano's in a pretty similar boat. Hopefully Cardano sees something like this. You're looking for a buy? Yeah, then I'd say don't. It could bounce off the support again, quote unquote support, but I don't know. You guys know I don't like to buy it there. I'd rather buy it a little bit lower. All right, GG's boys. If you're new here, here's the link to the Discord. We get some GG's in the chat. You can also do the customary way of saying GG's, like that. Next stream next month. No, I'm back from vacation, so I'll be streaming more often. The recording for this will likely be posted on YouTube tomorrow. If you missed it or you showed up late. Have a good rest of your day / night, depending on where you're from. Remember to use risk management and to pump Bitcoin. Keep pumping it. I don't think Traxy's streaming, right? Can someone check? No? Okay. GG's, y'all. Till next time. I'll notify you on the Discord next time I go live.